Here is my analysis for the short term on the stock market. I'm going to show you a chart that is a bit different than any I have illustrated before, in that it has both short-term and intermediate-term analysis on it. We have been talking about a stock market correction that we originally thought was going to come into August, and then based on the patterns, it was suggestive of coming into September. So we're getting close to that period now where we think that the decline will be coming. However, we are upgrading it again, and I will show you that. So this is SPY, and in a moment I'm going to show you the VIX and show you how implied volatilities align with this. So what we're looking at is cycle analysis, and again, you can learn about cycle analysis by going to our site, askSlim.com, and there's a video that you can watch regarding our cycle analysis workshop. Just go to that workshop tab and watch the video. I think you'll find it very interesting. So what we're looking at here are cycle brackets on the bottom, and they show you the average cycle period. In this case, each cycle is averaging around 20 days. This last one right over here was 23 days, so it gets a little bit longer at some times, and there is always a variance in here. These vertical lines show you the exact low, and you can see that sometimes it's not exactly on where the ideal low would come. This one pretty close, not bad over there, and then there is this projection that you see right over there. You can see that the last several cycles have been trading up this upward track, essentially this channel. This is a directional component, and it influences these cycles right over here. These are the ideal, but when you have an upward force, it then puts them in configurations that are positive, as you can see. In addition to that, if you understand the slim ribbon right over here, that shows you momentum conditions have been positive. And during the little corrections that we've had, it's only gone to neutral at times. So you can see the slim ribbon PO. That then tells you it's neutral. And when you get into long periods of green and just little blue corrections, you're in a very positive condition. The upward arrows show you the resumptions of the momentum condition, and when it's negative, it will be a downward arrow, and these will be red. But we've been very positive during this whole period. This yellow zone right over here coincides with this bigger cycle coming down, where there's an expectation of a correction. We have upgraded that correction based on several things. The most important thing is the shortness of time right in here, as the intermediate and the daily patterns only really show about 2-3 weeks, maybe a little bit more of corrective period in here. So we've upgraded that to the intermediate 23.6, which is at 431, or the intermediate 38.2, which is at 419. We were at 5.3 to 7.7%. Now it's 4.2 to 6.7%. That's where these levels are right over here. It's not a very big correction. Now I want you to see these corrective periods because I want you to understand. This one right over here, we have a note. Let me just go back so you could see that blue note. This cycle is in sync with the intermediate corrections in Apple, Microsoft, and Amazon. So we're expecting pullbacks in the mega caps to actually help with that declining phase right in there. Now, if you look over here, you can see where the last times that the dominant cycle coming off the weekly gave you a correction. This was at 5.8% on the downside, and this one was at 10% right over there. So you have the intermediate patterns off the weekly overlaid on here, and that's this one right over here coming up. So you can see how the intermediate and short-term patterns work together. There are actually, since the significant low, which is way back over here from the pandemic period, there have been basically a long repeat of very positive cyclical patterns. As a matter of fact, there is 8 out of the last 9 have all been configured very positively, with just that one right over here, which was kind of a flat cycle, coming in the dominant correction right over there. So it's been extremely positive. Momentum has been extremely positive, and you'll see that in the slim ribbon PO. So the expectation, again, over the next several weeks is that it will likely try to get higher. Now, the resistance levels right over here are 452 to 457. These are fib confluences that come off of the short term and the intermediate term right there, and then there's a minor 618 there at 452. So 452 to 457 is the resistance zone. It got up to about 450 here today, so there isn't really all that much room, and we expect that it will begin to give us sign of faltering and then get into this corrective period, which comes out into week 2 to week 3 of September, which is where our intermediate projection moved out to a number of weeks ago. So this is in alignment with that. You can see right in here all of those beautiful corrective periods and how they line up, and all of the fantastic cyclical patterns in here that in momentum wise have remained extremely bullish, and configuration have remained extremely bullish. Higher highs, higher lows, higher highs, higher lows, and higher highs. Positive momentum, and all of that we believe will be interrupted briefly for a decline in here. And when that's over with, this intermediate correction is done for, and then we get into these next rising phases. And I made a point that the Russell has made an important bottom already, and that really says that some months out here after this correction, the bull market will be continuing. So we just read it the way we see it, and we see a correction coming. We see it not lasting long, not being anywhere near as deep as we expected, and then the bull market resuming on the upside. Now, here's that corrective period we're looking at. I want to look at the VIX, VIX, for you to see. And this is these are the VIX cyclical patterns in here. And right now, we're at a period where this stock market is moving up, but the VIX is in a period where it is likely to rise again. And we talked about the short-term pattern in the stock market potentially declining into week 2 or week 3 in September. And we see implied volatilities potentially coming up in here. And then, of course, they will begin to come down again. So something like what we had right over here, where it chops around, all of a sudden we get a big spike. It doesn't last for a long period of time, and it's over with. So we're going to look for somewhere between 26 and 30 in the VIX coming out over here into September. And that does align with what we're looking for in the Spider SPY for that corrective period. As we come back over here to see this alignment of this correction is in alignment with the increase in implied volatilities, which we think now will be quite brief, and then the stock market be in much better shape going forward. I got to tell you, the breadth expansion and the small cap action says to me that there's a potential for October and November being very good for the small cap index. So that's the period we're looking for the stock market to make its highs of this bull market. And that's way different than our January 1st analysis. We just follow what the stock market tells us, and then I bring that to you.